Hey, what's up everybody? This is your host Raja Banks from New York Station live streams. Now, my trading journey goes back to April 2016. My first account was at IC Markets. We've moved on to Dominion Markets now. My first account was a $200 account in April. And I mean, hey, as we all know, when you start your first account, you know in trading you can make a lot of money, you can do this, you can do that. It was a $200 account. Needless to say, I blew it, right? Then I started back up again, took a course, started with around $700. You know, back then we were trading a very simplistic approach, right? Our approach was simple: only trade the 4-hour candles. Now, before we did that, read on babypips.com and all those websites, right? And the simplistic thing was to buy support and sell resistance. That's it, right? So back then when we first started, this was our approach, our raw approach towards trading. So here's what would happen. We would look at the 4-hour candles, because obviously when you're looking at the high time frame, like the 4-hour candle, you know, 1-hour candle, we know that if the 4-hour zones are there, and when the 4-hour candles go to those zones, that's it to a resistance, there's a very high probability there's going to be some sort of a rejection, price will retrace, and so on and so forth, right? So that was the idea. So we're, okay, what time do the 4-hour candles start? 4-hour candles start at, let's say if we're talking about Asian session, let's say when the market starts, it's at 5 p.m. Eastern. Then there's a 9 p.m. Eastern, 1 a.m. Eastern, 5 a.m., 9 a.m., 1 p.m., 5 p.m., so on and so forth, right? So we knew that, okay, every 4-hour candle starts at these times after 4 hours. So our approach was, all right, let's do this. Let's wait for a 4-hour candle to close. We chose, I chose 6 pairs and waited for every 4-hour candle to close. So let's say if you have AUD JPY, right? Australian dollar, and Japanese yen. And if the 4-hour candle is at a resistance, just mindlessly, we'll just say, okay, like, you know, 4-hour candle is at a resistance, let's take a sell, right? Took a sell, stop loss is 15 pips, and you know, on a 4-hour time frame, price is meant to reject that level on, let's say, the 30-minute time frame. On a 1-hour time frame, price would come down, let's say 10 pips, 15 pips, boom, secure profits, call it a day. That's what I did for the first 2 months, right? For the first 2 months, started with a $700 account, grew it up to $5,500 in the first 2 weeks, brought it back down to $600, took it back up to $4,000, brought it back down, and took it back up to like almost like $10,000, $12,000, brought it back down. Now, the reason why the account was coming down was because sometimes I would remove my stop, right? I would say, okay, you know what? I took a sell at a 4-hour resistance. Price has to reject, right? It has to, but it doesn't have to do what we think, right? Because, like, you know, if we have a bullish trend and the price is breaking resistance and you take a sell, that's a risky trade in itself, because now you're counting on the fact that that resistance will hold. Or if you took a buy at a 4-hour support, you're counting on the fact that the support is going to hold and price is going to reject. But sometimes there's so much volume, there's so much trending momentum in that direction that prices continues going negative. And when price goes negative, you're like, man, I'm just going to remove my stop. So when you remove your stop loss, then you're going in infinite drawdown, right? So that's what happened. Now, obviously, in the first 2 months, 2.5 months, super profitable, right? Super profitable. Took my account to like 12,000 and up and down, up and down. And then a light bulb went in my head, right? And I was like, okay, this light bulb would say, okay, I have people on Instagram that take 50 pips, you know, they take 100 pips, 200 pips, these big, massive gains. So I was like, okay, I want these gains as well. You know, it's an old saying that says that don't fix what's not broken, right? So my strategy, my trading plan to trade on major pairs on every 4-hour candle at a like, you know, strong zone of resistance or support, it was working. But then I was like, no, I need more. I need more pips. And that's what I did. I started learning about, you know, Fibonacci's and trend lines and harmonic patterns, Bollinger Bands, EMAs, and I took all this information and I put it in the charts. What happened when I put it in the charts? Fucking, you know, disaster. You know, because my strategy was simple. Now I implemented a lot. I implemented like a full-on mixture of 4 or 5 different strategies in my charts, and things started to fall apart. They started to fall apart. I would take trades on the 4-hour time frame, and I would start managing the trade on the daily or the weekly if it went against me. That's what happens to most of you guys, right? That when you take a trade, it goes in drawdown, you're like, oh shit, this was a scalp trade. And if this was a scalp trade, it's going in drawdown, let me take a look at the higher time frame. And when you take a look at the higher time frame is still in your favor, and you're like, okay, this was a scalp trade, now it's a swing trade. You get it, right? So those are the things that really held me back, right? I started to lose and lose and lose, and I think the first year I lost almost like $77,000, almost all of my profits. By the end of that year, it was up to like 100,000. I withdrew all my funds and went somewhere else and this and that, but it was just disaster, right? So when those things happen, because you need to understand, when you're going through a consistent losing streak, when I was going through that losing streak, it's a devastating feeling, right? Devastating feeling. You're losing every day. Your morale is down. Your ego's down. You can't tell nobody because no one's going to listen to you. No one's going to actually understand what it means to lose money in the markets, right? Better off that you've lost so much, you don't have the balls to tell somebody, hey man, I lost this much in a matter of, let's say, days, weeks, or months, because it's embarrassing. And now, what happened at that point, right? When you're going through a losing streak, when I went through that streak, here's what I did. This is exactly what I did. I looked at all my past wins, right? What's the word? Anyway, I operated on my, I started investigating my wins, for the lack of a better term. I started investigating my wins and started to see why I had these wins, right? What did I do right? Was I securing positions in time? Was my stop loss in place? Was my analysis correct, right? What was going on? Was I trading the pairs that are supposed to be traded in that specific time in this volume? What did I do differently? And I started to understand that, okay, all of my winning trades were taken in high volume times. You know, you have Asian Open, you have London Open, New York Open, high volume times. And when you go into after London close, volume dies down, right? You go after Asian Open, let's say 2-3 hours after Asian Open, volume starts to die down. You know, a couple hours before London Open, volume dies down. So all my losses were in when volume was down. And when I look at it logically, right? So when I looked at all my statements of losses, which I had from IC markets, now we move to Dominion markets, they were all haphazard trades, like trade after trade after trade after trade. So when I was winning, my daily trades were like 3-4 trades, daily trades, 3-4 trades. But when I was losing, my trades were like, 10 trades a day, 15 trades a day. I was using Fibonacci's on the 5-minute time frame. I was using EMAs on the 5-minute time frame, 10-minute time frame, Bollinger Bands on all smaller time frame. It just made no sense. Made no sense at all. So I had to turn things around, because I've lost so much that I said to myself, okay, you know what, Raja Banks, the train of losses has already left the building. You're way far ahead to quit now. And that's what happened. At the end of the day, I was like, you know what, logically, over trading is not working, over risking is not working. What I got to do is focus on 1 or 2 trades. It's going to take time, right? It took time. It took 8 months for me to lose almost 6 figures. Now maybe it can take 8 months for me to get consistent. Right? And if I can get consistent, my confidence is going to go up. My ego is going to go up. Naturally, my risk is going to go up. And when your risk goes up, your monetary return gets bigger. So that's what I did. I started focusing on 1 or 2 trades a day, 1 or 2 pairs, and things turn around automatically because you start to understand why pairs are moving. You start to understand, why certain things are happening at certain times, what news means for certain pairs, and so on and so forth. Right? So it's very simple. So if you're going through like a big drawdown right now, just calm down. Calm down, man, and take a step back. Take a step back and start rationalizing things. Because a lot of us, we get involved in our drawdown so much we can't think clearly. So if you want to think clearly, you got to focus on 1 or 2 trades a day. That's a simple approach.